Okay, so this is exercise 12-14, and we're talking about goodwill impairment. So the net assets of this particular division are 350 million, and that's 50 million in cash, 200 million for accounts receivable, property, plant, and equipment net, 2.6 million goodwill, and then less the notes payable. The way the book is approaching this is that this is unlike asset impairments, because even if management is expecting the future net cash flows from the project to be 400 million, what we're really kind of doing here is we're saying that we received an offer to purchase the division for 335 million. So the key here is that management has not had a lot of success and is deciding whether or not a write-down at this time is appropriate. So really what we have to kind of be wary of is, what is it if we have goodwill on our books? It's really kind of talking about, is this $200 million still, is this still truly an asset? Because obviously we bought this division, it's not performing the way we wanted it to, and now we're getting an offer here for 335 million. And so the book solution on this is basically saying, okay, you have a net book value is 350 million. Your fair value is 335 million. So therefore the adjustment is going to be 15 million. And the way you would do this is you would do a loss on impairment of goodwill, and this would be 15 million. And then you would just be crediting the goodwill. What's important to remember is that we do not, when it comes to goodwill, we're not going through and amortizing it. Rather, what we're going to go through and do is we're going to test it for impairment. And so if the fair value is the way that we're going to be going through and assessing this, then that might be a way we can do this. So record loss on impairment. And just to kind of give us a little bit of perspective, if we look at, and the one I like to do on this is Macy's. And we're going to look up their 10K. And I'm going to go back in time. And I'm going to mainly go back over here. So let's go ahead and take a look over here at 2000. What would this be? This would be, let's see here. Let's take a look at their financial statements. So this is from KPMG. So when I'm looking here at, so this one in particular right over here is that their goodwill roughly is, I think we actually this may have been predated what I wanted to show you. Let's go over here maybe to 2008. Okay, so right over here, you've got goodwill is roughly about 9.1 billion. And this was as of February 2nd, 2008. And so what we would be doing as Macy's is we would say, okay, we report goodwill when we make acquisitions. And so if later on, as we're going through and making, the acquisitions, so just remember like that 9.1 million. And as of today, what is the value of this goodwill? Well, now it's been written down over here to 828 million. So what Macy's did is they had taken their goodwill down to about 3.9 billion. And then they just flushed through a $3 billion write-off of goodwill. And so that's something to just kind of go through and think about. if we look at their income statement, so their income statement should show a pretty heavy loss. So as we see over here, cost of sales, we should see something about the, I would want to see, okay, so we've got gains on sale of real estate or loss, gains on sale of real estate, selling general administrative. Okay, so here you've got, so they took a $3.4 billion hit, impairment and restructuring and other costs. So this is something that, again, when you're dealing with Goodwill, that's what you're going to go through and do, is you're going to go through and impair it. And I've always thought with Macy's that their Goodwill was way too high as it is. So it's a good thing that they're writing it off, because the real value of that company is in their real estate. So let's just look over here. So we've got we've got this impairment, and then at December 31st, it is estimated the division's fair value increased to $345 million. We're not going to do anything with that. So once we write it down, we're not going to go through and then adjust it. So that's also something just to kind of go through and to kind of think about. So that's exercise 12-14. I hope you enjoyed this today, and I'll see you on the next video. Have a great one.